So I'm often asked about inflation, deflation, what are we going to see? And of course the answer depends on the territory that you're in. But here is a simple fact, and I predicted that this would be the case many years ago, and have continued to talk about this for quite a while. For most governments, the fear, the big thing that keeps them awake at night is not actually inflation, it's deflation. Why is that? Because inflation, okay, it's a problem, it's a challenge, but there are traditional measures to get it under control, although they may be painful. But deflation is a toxic poison, which is very difficult to eradicate from the life support system of the economy of a country. Let me explain. If you're in a deflating environment, everything that you own becomes worth less as the days go by, and the cash that you earn becomes worth more. So it is literally more worthwhile to put cash under your bed for tomorrow than it is to convert the cash into any product or whatever it is that you might want to buy, a property or anything else, because you can guarantee in a deflating environment that whatever assets you own are being wiped out, except for cash. Because if you wait until tomorrow, you can buy those assets for a fraction of the cost that you would pay for them today. So what it means is that the economy suspends. People stop spending. They stop even thinking about going out to the shops. They don't want to buy houses. They don't want to do anything. They just want to sit on cash. And they count their cash every single day. And every single day they become wealthier because that cash will buy more stuff tomorrow. That is a very dangerous and uncomfortable situation. It's a nightmare for central banks. And that is why banks have always chased an inflation rate rather than a zero inflation rate, an actual inflation rate, maybe 2% or whatever. The problem is this. For the last few years, banks have been, in many countries, chasing a rate of only 2%. Well, the problem with that is that stuff happens. You get seismic shocks in the economy, whether it's, I don't know, some kind of new conflict in the region. It could be, I don't know, a bird flu pandemic or a big scare about, let's say, a nuclear meltdown. Or it doesn't matter what it is. Shocks happen in the system, and when they do, they can catch central bankers out of their homes, as it were, and it can easily knock off 1.5%, 1.75% of an inflation rate. And you can't manage an inflation rate precisely on, let's say, 2%. You're always going to wobble up and down by 1.5% anyway, just because of the chaos of economic life and the fact that these economic models are impossible to predict with any real accuracy. So what that means is that if you're on a fairly downward spiral, or you've just wobbled around 1.5% inflation or even 2% inflation, or even worse, close to 0.5% inflation, and suddenly you get a small economic shock or a significant one, then you're in deflation. And bankers fear that so much that for years I have been predicting that they will consistently allow themselves to target unofficially a rate which is above the official targets. And that certainly happened with the Bank of England, chasing an official rate of 2%, but the actual rates that have been allowed have been 3%, 3.5%, 4%, 4.5%, even a rate of over 5%, while officially talking about 2%. And that's actually very sensible. In the British government's case, it's been even more sensible from their own government debt point of view, because they've been borrowing money, in hundreds of millions of pounds worth of money, at a rate of sometimes as low as 2% or around that, sometimes less. And then they've been allowing the value of pounds to be inflated away at up to 5.5%, which means that up to 3% or maybe even more of the entire national debt of over £1 trillion, 3% of it has been inflated away without repaying a single penny. What a stroke of genius for the government, at the expense, of course, of all those that have been frightened of stocks and shares and frightened of buying gold and frightened of the future and have bought British government bonds at a fixed rate of low interest because they just felt it would help them to sleep at night. Well, it's helped the British government sleep at night as well. So we live in a strange world where actually we are seeing fundamental stimulus in all kinds of places, which eventually will produce a higher rate of inflation than we've seen perhaps for 5, 6 or 7 or 8 years in many different parts of the world. Just look what's happened in the US. The US using clicks on an Excel spreadsheet, mouse clicks, and that's all you need to do to create up to $85 billion of new currency every single month. And that's just been reduced as the tapering has been happening of quantitative easing. That's been reduced to only $65 billion of new currency every month, effectively coming into the economy through different means, manipulations, buying this, offsetting that, and so on. The British government has already printed enough pounds using electronic tricks and distributed them around the economy, enough pounds to buy 1/3 of our entire national debt, and the process doesn't look like halting fundamentally. You can expect that if there's a further crisis, there will be new stimulus and so on. The European Union, the European Central Bank, is under pressure to do the same, but has been held back by all kinds of concerns, realistic, justified concerns, particularly in Germany, who have a fiercely sharp memory of the disastrous years of the Weimar Republic in the 1920s, when we had hyperinflation as a result of the German government printing huge numbers of marks. Why was that? In order to repay debt that was imposed in a settlement at the end of the First World War. As a result of that hyperinflation, every family in Germany has memories of grandpa wheeling wheelbarrows of cash to go and buy a loaf of bread. And by the time he got there, the bread was worth so much more that he needed 2 or 3 wheelbarrows of cash to buy the same loaf of bread. And that chaos created the climate for, many believe, the rise of fascism, and later created the seeds of discontent, which led to a second global conflict, the Second World War. Now, while we can discuss the exact mechanisms and relationships between different historical events, the fact is that hyperinflation remains a traumatic thought in the minds of the German people in particular, and they will point to more recent examples of Zimbabwe, which had 1 billion % inflation as a result of printing money, and so on. And those are the reasons why the European Central Bank is under pressure not to print large amounts of euros, but to be extremely prudent and responsible, and why it is that the British and American experiments in printing all these dollars and pounds has been considered so financially irresponsible and perverse. But we'll see how this plays out. I would say, on balance, over the next 5 to 10 years, we are far more likely to see inflationary pressures around the world than deflationary ones. We may have periods of deflation, but governments will move heaven and earth to try and shorten those periods to the smallest possible period of time. And inflation, what does that mean? It means that those who hold assets do well, physical assets do well. Those that hold cash, on the whole, will do badly, because it will be difficult in that kind of environment to get enough interest to cover all the deflating effects of the value of the money that you hold. And that's been the situation, in fact, to some degree, over the last few years in countries like the UK, where interest rates have effectively fallen to 0 for savers, or very near to that, while inflation, as I say, has been running at 1, 2, 3, 4, 5%. And that means in real terms, the value of people's cash has been going down, and it's been very difficult for people to protect their wealth. And that has been a kind of tax, an involuntary tax on people who've got wealth, and an involuntary benefit to those who've got huge debt, because those with huge debt have been paying very little for it, and their debts have been wiped out, just like the British government's debts have been wiped out by this strange environment.